Welcome, guys. This is the thick man himself, and today we are talking about AMC. So, apes, congregate, join us. Feel free to feel safe in here. We're going to be talking about AMC long term, good, bad, great, terrible, what I think, and just some information that might help you guys make a decision. But before we start, drop a like on the video, subscribe to the channel. Reply in the comments what you guys are feeling about AMC. I want to thank you guys all for tuning in. These videos are fun to make. I enjoy, sharing my thoughts with all of you guys. So show me some love. I'll show you some love moving forward. So this is AMC. This is the weekly chart. And you guys can see this thing has gotten absolutely annihilated the past 2 years. This is, when did this chart start? So this is 2020 all the way to present day, 2023. And it is the 28th of February right now. And you guys can see in 2021, this thing popped all the way to $45. Since then, it has been lower high, lower high, lower high, lower high, lower high, lower high, lower high after lower high, and lower low after lower low. Not a good sign technically. Usually we do not like to see that sort of thing, but I think there's an opportunity here for a bit of a, let's just draw this in. I was thinking it was more from here, if I remember right. A little bit of a pennant forming. Yeah, actually not. So no real pennant forming. I thought maybe there was, but obviously not. But there are some levels we can look at for long term here. The first one here is going to be this bottoming here right about, where is that? 575 is the top of that. That's the first level that we really had support in after April of 2021. The next one is going to be before this. There we go, right there. That one's sitting right about 350. That's another pretty good level that we can see from February of 2021. And then obviously we're going to have to throw the lows in there, which is $1.28. That's a long ways away, guys. Don't assume this is going to hit $1.28 or any sort of, under $2 like that. That's a long ways away. But if we were to get there, then $1.28 would be probably that bottom level. And then if we want to go above, this $9 level is very, very key. You can see it was support here, resistance here. It's a very, very key area. Let's draw another one in here. It was right here was the one I was looking at, which is about 1275 to 1280. You guys can see that was the top in January of 2021. And then that is the bottom in December of 2021. So here are the key levels that I have. If you guys want to stop, screenshot this, just write these down, something like that. Here they are. There's 5 of them. And this is what I think are the most key levels on AMC. Obviously, this video is fundamental. I wanted to start with technicals, but let's move into some of the fundamental side of AMC. This is the, the earnings, the financials, the trackers that we have for valuation. And so I'm going to give you guys a quick overview. So the market cap is right under $4 billion. Income is minus 820 million. Sales, 4.09 billion. So their sales are more than their market cap. Not a bad sign. We don't hate to see that. Usually that indicates that we have some possibility of this being a value play. But with that income, it's not really as much a value as we would like to see. We'd want to see that income in the positive, even if it's plus 10 million, even if it's something very, very small. We want to see them operating in a positive manner rather than hemorrhaging this income every single quarter. Book per share is negative $2.50. Don't love that. That's usually just a calculation used with a formula. Cash per share is $1.32. It's interesting because that lines up with the all-time low of AMC is $1.32. I think the all-time low is like $1.28, something like that. So that lines up with that extreme lows, which is very, very interesting to me. What else do we got here? That PS ratio is obviously right below 1. PC ratio is 5.78. Don't love that for something with a negative income. Current ratio is 0.6. We don't love that. Oh, my cat's feeder is going off. You guys can hear it. Let me open the door for my cat, and I'll be back in probably like 5 seconds, guys. All right, sorry about that. We can see here that the insider ownership has decreased by 95% in the past three months. 6 months, actually. Sorry. Hate that. 110%. Absolutely despise that. That shows that people inside the company think that this is probably headed for a more decline in the future. Institutional ownership, 25%. We don't love that either. We'd like to see that a little bit higher. And then the institutions are also selling. We don't like that. Target price, $2.39. We don't like to see that. Short float, obviously this is the apes, rocket ship. And short float is 25%. It is not massive. That's not really, a crazy amount. So nothing to run home about there. Let's move on to the earnings report that just came out about an hour and 20 minutes ago. You guys can screenshot this or pause this if you want to do your own analysis. But the things that stick out to me, so we see the net loss diluted share was 93 cents compared to $1.33 for 2021, which is much better for the full year of 2022 compared to 2021. Then we head down to fourth quarter, and they ended up with a higher loss than fourth quarter of 2021. We don't like to see that. We don't like to see them ending with a worse quarter than the year before, but the full year looks good for AMC. So the larger trend, they're looking decent. Now, obviously, net loss is not the only thing we want to look at there. We'd want to look at total revenues, which, they're increasing for the full year, but they decreased in quarter four. Another interesting kind of fact there, another interesting indicator there. Why are they, missing that quarter four of last year, the mark on that? But full year looks good. That's just an interesting kind of, divergence that we could dive deeper into if I had more time. But, that's just something to keep an eye on, is quarter four 2022 was not as good as quarter four 2021, but full year 2022 was better than full year 2021. Interesting kind of contradiction to notice. Again, guys, screenshot this, do whatever you need to do. I'm going to move on to the next thing, but this is full of good little tidbits that you guys could analyze here. All right, so what I have here is their trailing 12-month revenue, trailing 12-month net income, and then the net margin for those exact same time periods. So trailing 12-month revenue, this is from 2013 all the way to 2022. You guys can see it was, from 2013 to 2016, pretty consolidating in that area of $3 billion for revenue. It popped all the way up to $5 billion, almost $6 billion in 2020 or 2018. And then in 2019, the pandemic was just gearing up. 2020 pandemic hit. We hit rock bottom at $0.545 billion in revenue. And then now we're starting that climb back up towards those highs again. And it's been, pretty decent. We're starting to see some flattening. You guys can see the increases from this last trailing 12 months. So it began on 6/30, ended on 9/30. You guys can see that trailing 12 month is not looking great. And then obviously we can see from that earnings report last time that the quarter four of 2022 was not as good as quarter four of 2021. So this flattening is continuing. And you guys can see here on this net income, they've been negative for a while now. Since 2017, they were negative. 2020, they ran all the way down to this massive negative margin. And they've started to come back up, but they're flattening. They're starting to hit a wall here. You guys can see this wall in the past few quarters, the past few. I would say the past three, they've been about stalling right below negative $1 billion. And then you guys can see here their net margins doing the same exact thing. They were pretty bad in 2020 and 2021, starting to pop back up, but they are starting to stall. So this is their total liabilities, aka, total debt, total all of that stuff put together. And you guys can see in 2014, they were around $3 billion. 2018, they were around $7.6 billion, all the way to $8 billion kind of range area. 2019, they popped up to $12 billion. And then, they're dropping down to about 11.78. There's been a steady decrease in their total liabilities over the past, 2020? That's December of 2020, all the way to present day. There has been a steady decline in their total liabilities, which if you guys know liabilities, you don't want to have as many liabilities. You want to have more assets. And so seeing their liabilities decline, that's a good thing for us, for AMC investors. I'm not an AMC investor, but apes, that's a good thing for you guys. You guys want to see them paying off these liabilities, dealing with these liabilities. because there's a lot of stuff that they can use. There's a lot of, this is long-term debt. This is all of the stuff that they've taken loan-wise. This is everything. This is all of that. And to see it declining shows that they're, turning a corner possibly. They're able to start to pay some of this stuff off. They need to get that income, that negative income. They need to deal with that. But here, this is a decent sign. Obviously this year-over-year quarterly growth. So this is the growth of their total liabilities. And we can see it's finally hitting red, and it's finally been red for a little while, which is nice. That's good to see. That is a good indicator for AMC. Now I'm going to throw you guys right back to the other side of something bad for AMC. So this is AMC. This is their reverse split date. They're going to be voting on reverse split on March 14th, I believe, and it's a 10-for-1. So what that means is there will be a price increase on AMC shares, and if you have 10 shares, you will now have one. So the price right now is about $7. That means that each share will increase to $70. But you have to be holding 10 in order to get that full $70 share. And essentially what that means is there will be less shares on the market. It will probably create thinner movement. There will be probably, I guess what you could say is a smaller float. And what that will create is, a little bit bigger chance of if someone buys a lot of them, could increase the price quicker, that sort of thing. That's how float increases, or how float impacts a stock. And reverse split is not really good, guys. We don't want to see this. We don't want to see this from a company. We don't want them to have to, authorize a reverse split, because usually that shows that they're in fear of how small their price is going to be. They don't want to appear as a cheap stock. They want to appear as, this larger company with a higher share price. And a reverse split, it's usually not what we want to see, because a lot of times reverse splits are happening from trash companies who are just saving themselves against regulations of keeping their price above a certain number, and they have to reverse split. And then if these companies that are larger companies are reverse splitting, most of the time it's due to wanting to save appearances. There are some times where a reverse split is okay for companies that are decent companies, but most of the time reverse split is a negative indicator of the stock moving forward. This next thing I have here is the number of cinemas in the US. So this starts in 1995, and there were 7,000 of them. And you guys can just see in 1995, 7,000. It slowly just declines until this 5,000 range that we're in now. But the good news is we've stayed pretty, what's the right word? Pretty solid from about 2005, 2006, we were at 5,500, and right now we're at 5,477. This was obviously in 2020 because they're a bit skewed post 2020. So this is just the overall trend that I wanted to show you guys in the number of cinemas, number of movie theaters, and it is declining, but it's not declining quite as fast as everyone thinks. Obviously in 2021 and 2022, the numbers will be quite a bit lower, probably due to the amount that went under in the pandemic. But that's why I wanted to show you guys the domestic yearly box office. And what this shows is there was a pretty steady increase in the box office from, when does this start? 1977 all the way to 2020 and 2021. When 2020 was when that big drop off happened, obviously due to the pandemic, it went negative 81% on the box office numbers. But we're seeing a steady increase. And if this is accurate, data is as of February 28th. We're at $1 million, or a billion, a trillion, whatever the fuck that is. A quadrillion, a quintillion, whatever it is. We're at one of that. And, in 2022, we had 7, what is this? So this is 100, this is 1,000, this is million, this is billion. So we had 7 billion in 2022, and we have 1 billion to date. So that puts us right about 6 billion expected for 2023. Obviously, there might be big movies, might skew that. There might not be big movies, might skew that. But that puts us right in about this this consolidation range that we're seeing. It's not looking like it's going to increase massively. It's not looking like it's going to decrease massively. But we are seeing 7, and then 6 is expected moving forward. And what that puts us about is that doesn't have us up to that 11 again that we were before 2020. And so there's going to need to see some increase, but for now it is increasing. We saw 3 years, 2 billion, 4 billion, 7 billion. We're going to need to see that continue to increase for us to feel comfortable with AMC, because right now, if this, plays out exactly as it is, we're 2 months in to the year and we're at 1 billion. then, you know, 6 billion is going to be a decrease, and we're not going to want to see that if you're an AMC investor in the overall box office in the United States. All right. What is this? Oh, this is their website. I didn't even mean to have this up, but this is the AMC website. I think I went here for the investor relations earlier, but dude, Avatar, great movie. I haven't seen any of these other ones. Cocaine Bear, looks terrible. Looks like the worst thing I've ever seen in my entire life. Ooh, Atomic Antarchy. That looks kind of fire. Crystal Head Vodka, blue with an orange and cherry. I think I'd eat that and drink that. The Uppercut. That looks pretty fire too. Look at that. Ooh, Hennessy's in there. I don't like Hennessy. Hennessy's not my cup of tea. All right, but that concludes this video, guys. I just wanted to, give you guys my thoughts on AMC. I hope you guys learned something from this video. And if you guys have any questions, you know where to find me on Twitter. You know the comments below. I'll be around. I'll be looking at them. I'll be trying to answer questions, all that sort of stuff. Hope this helped you guys. Have a good week. Have a good month. And happy investing. Peace out.